That's right. So a lot of the kind of bullish sentiment around Uber this morning is looking at the IPO-related costs from driver compensation and from stock options based on the IPO. Those are typical IPO costs. And without that, the loss would have been less. But the company also missed on sales, and that's one of the kind of red flags in this report, in addition to that loss. Revenue was $3.17 billion versus an estimate of $3.36 billion, and that was 14% growth. One of the things one of the numbers a lot of people are pointing to is that Lyft had 72% growth in its earnings report earlier this week. So a little bit of weakness there from Uber versus its key competitor in the US market. Now, there are a couple of reasons for that are important to look at. One of them is that Uber is just diversified across a lot more businesses. So we know that Uber is investing heavily in Uber Eats, and that continues to be kind of weighing on its sales there. We saw that Uber Eats continued to grow, but also missed its sales forecast. And then there's the other factor here that Uber is just a much more international business. So it's not just looking at the US market. Even if the price wars are seeming to ease there and the competition with Lyft is stabilizing, Uber has a lot of competitors outside of that market. And that includes, particularly in this quarter, in the Latin America market, where revenues declined 24%. And part of that has been we've seen its competitor, Didi, the Chinese competitor, really ramp up its presence in Latin America.
I know the US and Canada are still the biggest markets for Uber, and it struck me being in the States last week how different Uber is there versus in London, because in London it is a clear, very strong competitor to, say, the black cab market, much, much cheaper, for instance. So you can see why a lot of consumers are very much, whip out their phone and grab an Uber. In the States, though, in New York, it was cheaper and sometimes just to catch a local cab. And if you talk about competition, not just from a Lyft, but from the domestic taxi market, then that's got to be an issue, doesn't it?
It does, and it's really interesting if you look at that U.S. market, because that's where they've kind of said, Lyft is already saying it has seen peak losses there. It's no longer, it's going to have this closer path to profitability than many had expected, and that was and remains to be one of the biggest concerns with both of these companies is how can they ultimately make money. And it looks like if there's signs that competition at least is a little bit less fierce, there's a little bit more predictability around pricing, that's going to create a little bit more stability for these companies in the ride-hailing market. With Uber, there's so many more components to this business, as I mentioned, that it's very, very difficult to understand, even if that is stabilizing in the one market, and even if it has a grasp on perhaps some of the regulations in the US, it continues to face a lot of hurdles abroad, and that's one of the factors we've seen here in London.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.